Mining Network's coverage of PDAC is brought to you by Tudor Gold.
Hello, welcome back to Mining Network. We're at PDAC, and I have the pleasure of being with Rick Rule for the second time in around a month. So, Rick, thank you for joining us.
Pleasure to be with you. Thank you for having me back.
I think it's quite a good time to have you back, because we spoke a lot about the future debt issues of America and what that meant for mining. I was on the plane over here listening to Elon Musk talk to Joe Rogan, and he said, as soon as he said it, I thought, blimey, Rick was telling me that a month ago. It was talking about the government debt in terms of the commitments that they have moving forward and how much that's going to cripple the country. And Elon was essentially saying, if we don't fix it right now, we're never going to be able to fix it. Do you think, now that you've seen Doge in action for a month, do you think they've got a good chance of getting the US back on track at all?
Not a prayer, it's theater. Your audience should read The Triumph of Politics by David Stockman, which details the derailment of the Reagan Revolution in 1980. The most recent Republican budget last week didn't deal with the deficit, never mind the debt at all. Let's put it in context. The aggregate US government debt includes $30 trillion net, trillion, in on-balance sheet obligations, and well over $100 trillion in unfunded obligations, entitlements, $130 trillion. To put that in context, it's more than 4 times gross domestic product. It's 26 times the gross federal budget before they spend a dime.
But Rick, he's going to sell a load of visas and it's going to cover the debt.
Elon is a known consumer. Now, I mean, I think how this ends. Yes, they cut some expenditures. And yes, they rejig entitlements. Old rich folks like me, they take away the cap on Social Security at the same time that they means test our benefit. In other words, they steal our contribution. And they raise the eligibility years. They have to do that. And then they inflate away the net present value of the obligation. In the 1970s, in the United States, we reduced the purchasing power of the US dollar by 75% in 10 years. That's a tax. But you can politically honor the nominal obligation if you inflate away the net present value of the obligation. That's how this ends. People need to understand that. There is no arithmetic alternative. One more time for your audience. There is no arithmetic alternative.
No, I know. We don't need to go into all the numbers again, because obviously people would have heard that last time. But I guess I can't see willingly Trump, Elon, Vivek, all of these guys wanting to print more money in this administration. Do you think this is something that we have a pretty rough couple of years ahead of us, where they will be trying to slash the deficit, and then afterwards we'll likely see another administration that's going to have to just do what needs to be done? And
no, I don't think so. I think they're pretty good at theater. And I don't think, just like you said, we don't need to do the numbers. People don't like to do the numbers. It isn't until people do the numbers that they understand the reality of the situation. So I think we paper over the problem for at least 2 years. Because people don't want to face reality. When people talk about fraud and abuse in government, they're talking about benefits they don't get. The benefits that they get are necessary and needed. The benefits that other people get are fraud and abuse. You can pass this down the road for a while. We did it through the decade of the 50s and 60s. In the decade of the 70s, the war on guns, the war in Vietnam, the guns, and the war on poverty, butter, came home to roost. We lost both, of course. What we were left with was the bill. And in the 70s, we paid the bill by depreciating the value of the US dollar over 10 years by 75%.
Do you see a scenario where, so you're looking at, there's been, again, a lot of headlines and a few announcements where people like SoftBank are committing $500 billion into the AI sector. We've seen Apple talking about bringing back some more jobs, I think quite a large number of jobs into the US. Is there any way that you could see where wage inflation could counteract some of the hardship that people are looking at, because we are starting to see a bit more?
For you and I, for people that have skills, for people who have developed their own franchise, they'll do fine. For the people who don't, they have a real problem. The income divide in the United States and globally has to do with the skills gap. People who are symbolic workers, people whose employment generates very large economic returns will continue to do spectacularly well. This is not a bad economy for me. An economy where you have artificially low interest rates, as an example, which we do today, subsidizes people like me with access to credit and the knowledge to use it.
Yeah.
For people who don't, this is very, very, very problematic. And the numbers that I'm talking about, the numbers that preclude the advancement of the welfare state from simple arithmetic purposes, are difficult for the people who rely on it, not for people who have alternatives like you and I.
But I guess to an extent though, if you are seeing a large influx of investment, better high quality jobs in the US, that should therefore increase tax revenues down the line, would you not assume? And so even though that these commitments down the line are higher, should we not start seeing high? You see it every year. You see the revenues come in are higher. So
well, higher, yes. Does it solve the problem? No. I know the numbers bore your audience, but the aggregate federal debt is $130 billion. The net trillion, I'm sorry.
Trillion, yeah.
Net revenue, the gross revenue of the U.S. dollar, the government, before they spend a dime, is $5 trillion. You see the problem? The size of the problem is 26 times the size of the solution. You don't solve this on the edge.
But the 130 isn't due today. It's due over a course of a much longer period, right? So if you were to divide that by, I don't know, how many years do you think that's including? 50 years, something like that?
Well,
the amount, and that would be back-end loaded, right? So
no.
In the short term, you're not going to see massive incremental increases if you're already slashing.
That's correct. The difficulty is that the on-balance sheet obligations of the U.S. government increase by $2 trillion a year.
Yeah.
In other words, any savings is used up in reducing the deficit. The off-balance sheet liabilities, which are Medicare, Medicaid, Social Security, that increases by another $2.5 trillion a year. The deficit between on-balance sheet and off-balance sheet currently is the same size as gross federal revenues. Let's assume, just for fun, that higher taxes increases the revenue by 50%.
Well, I'm not talking about higher taxes, but yeah, I see where you come. I'm talking about if you have people are earning more money, you're just bringing more tax revenue because of that, right? I'm not saying that they should increase taxes. I mean, if anything, I'd like to see them come down, as I'm sure you would.
I hear what you're saying. The arithmetic means that the deterioration of the purchasing power of the dollar is the only way out. The narrative is unpleasant, particularly for a young person like you. If you're an American, you're going to pay into Social Security, and you're going to pay into Medicare, and you're going to pay into Medicaid. You're going to pay into the federal government pension scheme, whether you're a federal government employee or not. You're just not going to get any benefit from it.
Oh, look, as a Brit, I've accepted that we're toast. It's over for Britain, but I'd like to hope that there's still a glimmer of possibility that the US could get themselves out of this trouble.
We will get out of the trouble, but it will be extremely inconvenient. We got through the decade of the 70s. We did it by inflating away the net present value of the purchasing power. We did it by reducing American standards of living substantially over the course of the decade.
Yeah.
And that's what's going to happen again. In a biblical sense, there needs to be a reckoning. Maybe not as deep a reckoning as there was, allegedly, in the Bible, but certainly as deep a reckoning as there was in the decade of the 70s.
How does this play out with fiat currency? Obviously, I feel like we're in a bit of uncharted territory to an extent, because when you go real far back into the history books, there was always that gold standard or the currency was backed by something, so you couldn't be as reckless, and if there were, you would see a huge crash, you would see a collapse. Is there not a possibility that with this fiat currency, obviously, this can just carry on going on so long, but I guess the ultimate answer is, like you were saying, people can just buy less for their money.
Yeah, the only answer I see, an old codger like me, I don't know what they pay me. Let's say they pay me $4,000 a month in Social Security. I don't know what they pay me, to be honest with you. They'll continue to pay it.
Yeah.
But that $4,000 will buy $700 or $800 worth of goods and services.
Yeah. Well,
that's what'll happen.
Yeah.
The tax rate, of course, the nominal taxes will increase as a consequence of inflation. The nominal benefit will stay stable, but the actual benefit will decline substantially.
How are you looking at it at the moment in terms of, because I think if you look at purchasing gold at the beginning of last year, I think there was about a 40% increase last year, right? Outperformed even mining equities. Mm-hmm. You're looking at, we had another investor on the show just before this who was talking about they're buying ounces in the ground at the moment for around $7 an ounce in resource ounces. So how are you looking at getting best exposure? The everyday person because I think when you're investing in mining, you really need to understand what you're doing in terms of analysing the risks and the people involved, the jurisdictional risk, even the geological risk at some point. But how do you go about, I guess, educating the world in terms of what they should be doing right now? Should they just be looking at the hard assets or equities?
There's no one-size-fits-all answer.
Yeah.
It's very difficult for me to understand why somebody wouldn't own physical gold.
Yeah.
Because I believe that a replay of the 70s, in a financial sense, is inevitable, you need to look at what worked in the 70s. During the period where the US dollar lost 75% of its purchasing power and other countries did worse, the gold price increased 30-fold.
Yeah.
Now, will it increase 30-fold this time? Unlikely, because it's going from a higher base.
Yeah.
But gold has done well during periods of time when faith in fiat currencies has been shaken. And I think it will be, because of the arithmetic, shaken. So to start with, everybody needs to save something in gold. I'm not saying abandon the US dollar or the British pound. Maintain liquidity in the currencies that you spend, but maintain your savings in gold. If you are willing to do some work, if you have the psychological constitution to tolerate volatility and risk, then invest in the gold stocks, and if you have money left over, speculate in the juniors. Those are three different businesses. Savings, that's gold. Investing, that's the big gold stocks. Speculating, that's the gold juniors. They're three different businesses.
Yeah.
Everybody should be in the first business. Everybody should save in gold. People who are willing to do some work and take some risk and endure some volatility should invest in the biggest and the best gold producers.
Yeah.
People who are willing to do a lot of work, who want to outperform the market, who are seeking alpha, can speculate in the juniors, but they need to decide what bucket they're in and for how much.
Yeah, no, I'd agree with that, definitely. I think the only reason why I was pushing on you on sort of how the US could potentially get out of this, because I think in my mind I'm pretty set on what the opportunity in gold is in terms of the devaluation of the dollar, or even worse in most other currencies. So gold's been a great place, even when you look at different currency rates. But I guess sometimes I just don't want to, and I think a lot of people, it seems so obvious, but obviously it's easy to get things wrong and get tunnel vision.
Right.
We've seen a slight correction in gold at the moment, but we've seen others and they've always bounced back. How confident are you on your thesis that really gold is the safest haven?
The guy on screen, that's me, Ken Conkin. I'm the president and CEO of Tudor Gold Corp. I co-discovered the Brucejack mine in Canada's Golden Triangle with my colleagues Joe Ofsnick and Ken McNaughton. And in 2021, Brucejack was purchased by Newcrest for $2.8 billion. We have reassembled the team, and we have made another significant discovery just 15 kilometers north of the Brucejack mine. The Goldstorm deposit today hosts approximately 28 million gold equivalent ounces, including close to 3 billion pounds of copper, making it one of the largest copper gold discoveries in the past 30 years. Initially, Goldstorm appeared to be a large-scale bulk tonnage target. However, recently we had a major breakthrough when we discovered a new complex carrying high-grade gold, hitting in excess of 20 grams per ton gold with intercepts of over 25 meters. Visible gold observed throughout the core suggests the possibility for excellent gold recoveries. Our next steps, it's all about high grade, and more high grade. We plan to expand and explore the potential of this new spectacular high-grade gold system, which initially was one structure and is now four. The history of the Brucejack story seems to be repeating itself. We believe we are on the pathway to demonstrating another multi-billion-dollar project in the Triangle. We would be honored to have you follow the journey as we intensify our exploration efforts in 2025.
I would be delighted to be wrong.
Yeah.
When people say to me, Rick, when is the gold price finally going to move? I scratch my chin sagely, and I say 2000. In the year 2000, gold was $250 an ounce. Now it's $28.50. Gold is up sevenfold in 24 years. It's gained 8% compounded. Gold has done its job for 25 years.
Yeah.
People, of course, are saying, when is gold going to double? I don't know. I don't care.
Yeah.
That isn't the purpose of savings. The purpose of savings is to maintain your family's purchasing power over time.
No, I agree.
And gold has done a spectacular job of that. And it's done a spectacular job of that for 25 years.
Yeah, no, I completely agree. Moving on to something that, if you had invested in it over the last few years, you probably wouldn't be as happy, is nickel. Obviously, I've heard you speaking a fair amount recently about how you're bullish on nickel, you're buying up nickel juniors and nickel stocks. Obviously, we've had a massive influx of nickel over the last few years from Indonesia and the Philippines. How do you see this playing out? We really briefly touched on it, if you remember, at the end of our last interview, and we didn't have a lot of time left, so hopefully we've got a little bit more time today to talk about nickel. I've spoken to so many different forecasters on nickel, and most of them say best case scenario 2028, 2029, we might see sort of prices up around the 18, 20, 22 if, in a bull case scenario. Still not great, but maybe a bit more incentivizing for Western companies. What's your view on this?
Very similar.
Yeah.
Late 27, 28, 29, subject to change. You know, what I've learned in 50 years of forecasting is it's really hard to be wrong and really easy, really hard to be right, really easy to be wrong.
Yeah.
I'm attracted to commodities where the supply of the commodity is essential for the ongoing well-being of humankind, where those commodities are priced below the cost of production.
Yep.
At least in sulfide nickel production, we're there. You're seeing professional capitulation. Long established developed mines that have $1 billion or $2 billion in sunk capital costs are being shut. It's a very, very good sign. The cure for low prices is always low prices. It's important that your audience understand that. But the other thing that's important for your audience to understand is there's a difference between the words inevitable and imminent in English. Will this occur in 27 or 28? I think so. Is it time to start learning about sulfide nickel deposits? Absolutely. Is it time to deploy capital? Only if you're Rick Rule. Only if you are patient, and only if you're pathologically cheap and unable, as I am, to pay up. Now, when you talk about the laterite nickel production, I, about 6 months ago, flew over southern Sulawesi and saw firsthand the outcome of that, the incredible environmental destruction that occurs, where the overburden is being pushed off the beach.
Yeah, they're stripping away of forests and
square kilometers of mud plumes over the coral reefs. I don't think that will continue to be politically feasible in Indonesia or the Philippines. Just like I don't believe that the environmental degradation in far western China in the rare earths business will continue to be acceptable to the Chinese people or the Chinese government. So I think that the lower cost producers will end up being higher cost producers over time, because I think that the total cost will begin to be factored into the income statement in the nickel business, and by the way, in the rare earths business.
Yeah, so in terms of how that plays out then, are you essentially saying that what we're going to see is less scale up? So, because obviously where we've seen this massive flood in the market and where they can have energy that's so cheap, and obviously a lot of environmental disaster and low cheap wages, are you starting to see any indication that that's starting to change already in Indonesia or China or anywhere like that?
No. Funded expansions suggest that the expansion of lateritic nickel production continues for at least 18 months.
Okay.
Funded expansions. Not promised, not prayed for, but rather funded expansions. So I don't think that you are going to see a cessation in the increase in lateritic nickel production in the next year and a half, unless you saw vastly higher energy prices. What you are starting to see is the reduction in sulfide nickel production offsetting the increases in the ramp up of lateritic nickel production. So it wouldn't surprise me to see global nickel production increase by 3% compounded as opposed to 7 or 8.
Okay.
Meanwhile, the very low prices for nickel on the global market is discouraging conservation of nickel and is encouraging the development of technological applications for nickel across a wide variety of products. Remember that the cure for low prices is always low prices.
Yeah.
You disincent production and you incent consumption. And when these lines cross in the out years, the cross is dramatic.
Yeah, it's that substitution game, isn't it? It's so at the moment that we're starting to. I think at the moment that we're seeing year on year around 10% demand increase for nickel. So by that logic, you'd suggest then that demand should increase even further than that because the price is so low. People are going to start substituting other metals. Okay, and then obviously where we're seeing mines in Western Australia and around the West all closing down, I think Indonesia and Philippines are what now, like 75% of nickel production?
I don't know what the number is, but
something like that.
And importantly, they occupy the bottom half of the cost curve.
Yeah, they do.
They win the last man standing contest.
Yeah, they do. Yeah. So I guess it's just a consequence of at what point do they stop scaling up, and then demand needs to catch up at that point.
I think that happens much more quickly than people think. Now, of course, when you talk to mining speculators, quick to them means before the next long weekend, because they're long. When I talk about quick, I'm talking about 5-year horizons.
Yeah. Okay.
I don't think beyond funded expansions now that you're going to see much expansion, because I think that you're going to see a consequence of the upfront funding, increasingly, of the environmental consequences of lateritic nickel production. And that's going to change things a lot.
What do you think about companies in the nickel space? We see this in cobalt, for example. I think back in 2017, all of a sudden we saw a load of companies who had something else, cobalt's hot, and we saw them change to something cobalt. I'm starting to see in the nickel space now, they're changing their name from nickel to polymetallic or something else.
I think that's great. I think all those cockroaches should be put in the corner and sprayed. You see these companies that have been gold companies, and then they became pot companies,
and now they're antimony companies.
The world has 3,000 junior miners, and the world should probably have 500, which means that 2,500 listings should go to listings heaven. I look forward to them pursuing careers outside of mining.
Something I wanted to talk to you about a long time ago actually was flow through in Canada. Mm-hmm. As a libertarian, if you had that libertarian hat on, you'd say, well, businesses shouldn't have any government intervention. Mm-hmm. You shouldn't have the Canadian government essentially funding exploration, because what you're starting to see is that a lot of companies that potentially don't deserve investment are getting funded to put a load of drill holes in the ground that otherwise in a free market wouldn't. But on the other hand, you've got critical supply shortages, you've got trade wars with China, there is a need for more mines. What's your view on it? Is it a good thing, or should the market be left alone?
I think flow-through is a distortion.
Yeah.
I'm not so sure that I regard not stealing taxpayers' money as a diversion. I consider the tax a diversion. So from a moral point of view, anything that reduces tax collection, I think is a benefit to society.
Yeah.
The distortion, which is to say tax preferences for mining or tax preferences for motion pictures or tax preferences for anything, I think is unfortunate. I seem to be, like most people, a little less critical of distortions in my favor than distortions against me.
Yeah.
But my preference in a world would see the government, for the most part, dry up and blow away, so that there wouldn't need to be the distortions in favor of certain industries, that the industries were funded based on their own economics. Now, the voters don't pay an awful lot of attention to my preference, so this is a discussion that's mainly involved in pushing air.
Well, I just wonder though, it's like you look on the Canadian Securities Exchange, the Toronto Stock Exchange, and then the TSXV as well, right? You've got, I think within those exchanges, what have you got, about 1,500, 2,000 companies just in Canada? I think there's about 700 in Australia, and then there's a few more scattered across other exchanges, but massive resource, a massive amount of resource companies in Canada, right? How many of them would exist without flow-through is my question.
Well, in terms of domestic exploration in Canada, I think it would probably decline by half.
Yeah.
And I think that would be a good thing.
Yeah.
The industry is grossly overfunded, despite the protestations to the contrary. And to the extent that you had many less aspirants, I think that the real funding to the industry would probably be sufficient to fund the real teams in the industry, with the caveat that the real teams in the industry are probably 10 to 20% of the total teams that are in the industry.
Yeah.
So the 80% that are superfluous obviously find that point of view objectionable.
Okay, and then how are you weeding out the opportunities then? Because I think you're right. There are a lot of issuers that I wouldn't want to touch with a barge pole with my money. But you've been doing this a hell of a lot longer than me and a lot more successful. I think obviously there's management, the track record. There's so many different issues. And I think I've heard you talk about this before. For me, I'm starting to get of the opinion now that management team probably matters more than anything else.
It does.
Yeah.
It does. Because I've been in the business for a very long time, I have what used to be called a very deep Rolodex. And anymore, if somebody isn't known to me or very well known to people who are known to me as being successful, or better yet, serially successful, I don't care.
Yeah.
I just don't care. What you find is that there are very established patterns in performance dispersal curves, sort of Pareto's law.
Yep.
It is true that 20% of the exploration community generates 80% of the discoveries. It is also true that if you run that performance dispersal curve, the 20%, through the same dispersal curve, that it conformably aligns, which is to say that 20% of the 20% generate 80% of the 80%. So 4% of the exploration community generates 60 to 65% of the discoveries. If you identify and hang out with the 4% and lavish love, care, and attention on the proven performers, you make more money over time.
Yeah. No.
You miss a few things, but you avoid a bunch of failure.
Yeah. Last topic was uranium. Obviously, you've been bullish on uranium. I remember hearing you talk about uranium when everyone hated it.
Yep.
Back in 2016, 2017. Yep. No one wanted to hear about uranium.
Yep.
And you were banging that drum, similar to how you're banging the drum about nickel now, actually,
right.
in a way. We did see a really nice rally last year. Obviously, Sprott then created the ETF in uranium as well, which created even more excitement. I think we got up to $100 or even more in the uranium price.
Very short term, but yes, it went into triple digits briefly.
Yeah, and now we're back at around the 65 level. Maybe just looking at that, I mean, are you looking at this as a buying opportunity, or how long's the timeline?
A very selective buying opportunity.
Okay.
I think it's important to note that in the uranium business, the game has changed completely. Investors pay slavish attention to the spot market, and the spot market's becoming an irrelevancy. The spot market is so thin that most days the daily trading volume of the Sprott product is greater than the daily trading volume of the spot product. In fact,
really?
The Sprott market is becoming the spot market.
Yeah.
People pay attention to it, but that's not where the action is. The action's in the term market. In uranium, unlike any other commodity in the world, producers and consumers can meet contractually outside of the futures market and contract with regard to price and volume, which means in uranium, unlike any other commodity in the world, you can do cash flow forecasts that are constrained by certainty in terms of price and volume. You can establish net present values for a project, which means as a lender, your risk is reduced by 3/4. As a securities analyst, your risk is reduced by 80%. Right now, the term market's extremely opaque. There isn't much information about the term market. So it hasn't impacted the uranium equities market. But when certainty creeps into the uranium equities markets, they will reprice.
Yeah.
If you're a junior, let's say that you made a uranium discovery. Okay, you yourself did an economic uranium discovery, but nobody knows you. You can't finance it off balance sheet. If your uranium deposit is good enough that you can forward contract to Korea Electric Power, Tokyo Power, Duke companies, Southern companies, and at the same time you can go to Westinghouse and get the mine built on a turnkey, you can take those power purchase agreements, those uranium purchase agreements, and your turnkey construction contract to a bank and get financed. Doesn't mean you want to build the mine, but it does mean where 15 years ago your alternative was to sell that mine to Cameco, or Cameco.
Yep.
Now you introduce competitive tension. I can build this mine, I don't have to have an investment grade balance sheet because I have offtake contracts with people who do. This is a game changer. And not 1 in 1,000 uranium speculators understands it. They pay attention to the spot market, and the spot market is relevant only to the extent that it constrains the term market. That's all that matters.
Okay, that actually sort of answers what my next question was going to be, because I remember when I was first looking into the uranium aspect, when you were talking about it back in 2017. Right. Obviously, this was post-Japan shutting down their reactors and whatnot. And what we started to see was companies like Cameco shutting down or putting on care and maintenance a lot of their existing production. For me, I always had the assumption that, well, the junior space in uranium is almost irrelevant, because as soon as the price starts going back up, you're just going to see the tap go back online with the existing producers. Is that not a risk in your view?
Yes, but it's a long-term risk.
Yeah.
Understand that the uranium market in 2017, 2018 was very different than today. At that point in time, producers who could produce were selling the stuff for $20 a pound.
Yeah.
And it was costing the industry 60 to produce it. Yeah. So you're making it for 60, you're selling it for 20, losing $40 a pound, trying to make it up on volume.
Yeah.
The price had to go up. The incentive price for uranium now in term contracts is about $75. That's no longer true. People can make money at $75. The price doesn't have to go up anymore. What's changed now is the certainty, the ability to sell material into a market with a credit grade counterparty. So the investment thesis between the point in time when the price had to go up and now where you construct cash flow certainty over the life of the mine, very, very different circumstance. Mercifully for me, in 2018, nobody cared that the price had to go up.
Yep.
And in 2025, nobody cares about the certainty around the term contract. What I found is that I compete extremely well in markets where I have no competition.
Yeah. Well, until the competition arrives, and then you're in a good position.
And then competition's called a bid.
Yeah.
When the outcome is certain, when the narrative becomes well known, the price makes the narrative irrelevant.
Yeah, it's funny because we were just talking about next gen earlier. They're pumping out, I think in free cash flow, like $1 billion a year. And they're valued at $5 billion right now, right? Obviously, you've got permitting risk. You might have a little bit of, construction risk. But once you're there, that's
next gen, I would suggest you have 3 challenges with. There is zero deposit risk, and the deposit could get better. They don't need to make it better now, so they're not drilling it really.
Yeah.
But deposit, there is deposit upside.
So
let's get that out of the way.
Yeah.
And it is the best or the second best undeveloped uranium deposit on the planet. Period. Full stop. 3 risks. Net present value. When does it get built? If it gets built 10 years from now, at an 8% discount, that means that most of the net present value went away.
Oh, it's gone. Yeah.
In time value of money.
Yeah.
That's your first risk. The second is how much money do they spend between now and then? In other words, how much of the net present value gets cannibalized in G&A?
Well, and that's a big criticism.
It's a huge criticism, and it's valid. What does sponsoring a hockey team or Formula One have to do with cost of capital or reducing risk? I would suggest 0.
Yeah, I can't remember their argument for that. I do remember reading it at the time. I think it was something along the lines of off-take contracts or getting in with certain. I can't remember, but it didn't really.
The off-take contract, I think, goes to the criticism that the last financing that they did was unnecessary and excessive. Their counter argument was that having the uranium in inventory gave them the ability to say to off-takers, if we're 2 years late, we still make deliveries because we have the uranium.
Yeah.
That's a valid argument. Was it worthwhile paying 9% for in the interregnum period? No. And by the way, what did securing the voting rights for management have to do with an offtake agreement?
Yeah.
There are valid criticisms. I own the stock. Let's get this out of the way.
Yeah. I was going to ask you if you did or not.
I can absorb a lot of sin if the net present value and optionality of the deposit is high enough. And there are a lot of things they're doing behind the scenes, in fairness, that people don't see that are adding value. The agreements that they're trying to effect with the Aboriginal and Métis agreement the flora and fauna work, the water work. There's a whole bunch of advanced engineering that's going in there that's being done very well that the market pays no attention to, which will impact their ability to sell the deposit or build the deposit. There is real progress taking place right now.
That's good. Yeah.
There's just an absurd level of non-project G&A.
Do they almost get away with it? Because I think any other mining company, if you saw that level of G&A, or even as a ratio to what they've brought in, I think anyone else, any other project, you'd look at it and go, not worth it, not going to touch it because
there
because
is
of it.
so much net present value to cannibalize.
Yeah.
That a sort of a green eye shade guy like me says, I have to own this.
Yeah.
Now, the second problem there is nobody has much experience with this, but there's a lot of suggestion in Canada, including some from Cameco, that the front-end capital costs there have been really grievously understated.
Well, that wouldn't be the first time in mining, would it? Yeah.
No.
Okay. All right. So yeah, potentially. Okay. So buyers beware. Essentially, that there are some risks there.
With the caveat, I own it.
Yeah, with the caveat that you own it. Well, no, I think again, this just goes back to the.
Another caveat is probably in order here because your audience doesn't know much about my investing history. I was involved in NextGen very, very early on.
Yeah.
And in terms of the size of my investment, I have no net investment. I've sold enough that I have the rest for free.
Right.
Now, any day that you wake up and you don't sell a stock that's in your portfolio, it's the same as having bought it. People need to understand that. Every day that you don't sell, you rebought. X capital gains tax.
Yeah.
But it's fair to say, when I say I own the stock, that from most people's point of view, given that I have no investment in it, given that I've sold enough that I've recouped my cost, they would suggest that I have no exposure. I don't think of my portfolio that way. I think that every day that I have money tied up in that name as opposed to another name, I rebought it.
Interesting. Just a final question. How are you looking at asset allocation at the moment, even for yourself? Have you got I'm not asking you for the winning formula as such, but have you got a mindset as to how much on juniors, how much on cash flow producing, how much on hard assets?
Yeah, but I'm very different.
Yeah.
I know what I'm doing in the junior space, so I can afford to speculate. I've told people for years, own the number of juniors that corresponds with the number of hours per month you're willing to spend studying your portfolio.
Yeah, it's a really good point, that. Yeah.
If you're willing to spend 10 hours a month reading 10Ks and 10Qs, quarterlies, insider filings, then you can own 10 juniors.
Yeah.
Many speculators own 60 juniors and spend 0 hours per month. That's wrong. In terms of my own portfolio, I'm way too long cash. I have way too much liquidity.
Okay.
Most people don't have enough liquidity. I have way too much. I have been, I would suggest, opportunity constrained. I built up a passive real estate portfolio for many years. When I got the sense that the interest rates were going to rise, and I didn't know much about real estate, I'd been very lucky, I sold it. And the consequence is I haven't been able to redeploy that money. So personally, I'm extraordinarily liquid because I've been more opportunity constrained than I would have liked.
I hear a lot of investors at the moment saying that they've got a lot of cash that they're holding on to, but that's by design, and that they're sort of waiting for.
They've made a strategic decision.
Yeah.
I've made it. I've been tactically constrained.
Okay, good. And I guess for you, is it just a case of you're waiting for the right opportunities in terms of on the micro level, in terms of the company levels, or are you waiting for a macro event to deploy it?
No, a micro event. I'm here at PDAC looking for companies to buy.
Okay.
Looking to deploy.
Yeah. Well, fortunately, even if people don't have time to spend 10 hours a month or 20 hours a month to hold these, so obviously you've got a rating system. We spoke about this last time. I've used it. I've been humbled by it. So maybe we can tell the audience a little bit.
Any of your viewers who like what I have to say about natural resources and want to personalize it can go to my website, ruleinvestmentmedia.com. List your natural resource stocks, and I personally will rank them 1 to 10, 1 being best, 10 being worst. I'll comment on individual issues if I think my comments might have value. And by the way, please, no crypto, no pot stocks, no tech stocks. Leave an old man to do what he does well.
Yeah. One follow-up question on that. I remember when I first used that platform, this would have been, good 4 or 5 years ago. I think it's been running for a while now, hasn't it? I put on some project generators on there, and you rated them quite highly. Do you still look at project generators? Because I don't think project generators have really performed as well as they should have done.
The market hates the prospect generators, which is why I like them.
Yeah.
My whole game is risk-adjusted net present value relative to enterprise value. The probability of success in a project generator, in terms of exploration success, return on capital employed, is easily arithmetically the best in the industry. The fact that it's out of favor makes it unattractive to most people and makes it attractive to me.
Interesting. Do you use the same logic with royalty companies
Yes,
as
sir.
well? Yeah.
Yes, sir.
Okay. All right, brilliant. All right, well, Rick, thank you very much for your time.
Thank you.